Well, good day, everyone, and welcome to the Financial Services Club and another edition of CommunityZ Chest. For those of you who don't know me, I'm Michael Mainelli. I'm one of the directors of Zien Group, and it is a real delight to have one of our friends, Jonny Fry. We'll get on to
Well,
Jonny in a minute. Welcome, Jonny.
you well?
I'm doing well, and it's really good to have you online today.
Thank you.
Uh,
Apologies, my video's not working, so they've only got to stare at your ugly chops instead, I'm afraid.
well, anyway, it may not be working, but the sound quality is excellent. Now, we're delighted here today because what we do on CommunityZ Chest is we let some member of the financial services community get something off their chest. And Jonny has a very rich background, which we'll get into in a minute. What Jonny wanted to cover, though, was a lot of things to do with debt. And so it's going to be a little bit of a coronavirus element here that Jonny will be picking up with a couple of suggestions and a request or two from you in the audience. So what I'd like to do, Jonny, is just tell us a little bit about your background.
Yeah, sure. Well, I basically set up in sunny Shepherd's Bush back in 1986 a company which really to manage people's money, and I thought I was at the cutting edge of technology because I bought a television with teletext. Because I could then find out what was happening to the FTSE with a 15-minute time delay, as opposed to buying the FT, which was 24 hours late. And
Teletext,
so
that
I
throws
spoke,
us back.
yeah. So I think that was about the height of my technical prowess. As you can tell, I can't even get my webcam to work these days. But there you go. So that really went on, and the company called Premier Asset Management, which is still a quoted company on the London Stock Exchange, with 10, 12 billion, I think, under management now. But that really taught me a little bit, obviously, about managing money. It was just before the Financial Services Authority came into place, so it was a couple of years prior, and then in regulation. And so most of my working life, I've been involved in the financial sector on and off. I'm currently chairman of a company called Gemini Investment Management, which is the majority owner of a platform in Dublin, which provides UCITS administration. So keeping my sort of hand in. And I'm interested in that area because very, very keen on looking at how do we improve the efficiency of funds and make them more appealing and attractive for private investors, because we're still seeing a lot of people now coming into this sector with their private pensions and the like, but there's a big issue around costs and regulation, which we'll perhaps come on to. So now I find myself, I think they talk it being in multiple different different sort of interests. NED on a couple of big companies, a couple of advisory companies, but most of my time I actually spend writing something called Digital Bytes, which has been going on for a couple of years, and it's really looking at an analysis of how, where, and why the technology around blockchain and digital assets are being used. And we supplement that with a monthly meetup, which started in February 2017. And it's grandly called Masterclasses. And it's really trying to get companies to come along and explain how, where, and why they're using the technology. And it's really ranged from startups through to IBM and Aberdeen Standard Life. So a real selection of different companies, and really trying to challenge them. Well, is this technology any good? Why should we bother with it? It's not about learning how to use, if you like, to program, but it's more looking at the commercial aspects. So that's kind of what we do, but very much with a mind and on compliance and regulation and risk, because certainly having had the experience of running a public company, probably the most important things, a bit like in medicine, actually preempting and sort of prevention is better than cure. And so actually running businesses that way proved to be quite effective over the years.
Jonny, was there some sort of Damascene moment that made you, an old financial trading guy, decide that blockchain was worth spending a lot of time on?
I think it was more having sort of left Premier a few years ago and got involved in a number of other businesses as an advisor, mentor, investor, and seen the common traits and the common frustrations and problems, particularly in the SME sector. SMEs are under a huge amount of pressure. It's incredibly difficult to raise debt or finance, and looking for ways in which to use data in a much more structured manner, data that can be verified, that can be relied upon. And I was interested more in the technology. I was never really interested in the dreaded crypto per se. I really don't give a rat's, what happens to Bitcoin per se. But
Oh, good.
I think what it's done, it's really brought the technology to, whether that's right or wrong, but it's brought it much more into the sort of popular vernacular, and people are sort of much more interested. And again, whether it's right or wrong, it's not for me to judge, but certainly you can see individuals, companies, and governments actually embracing this whole fear or whole sphere of digital assets and blockchain to a greater extent. And I use the two fairly interchangeably, and I'm very interested to see what the Chinese are up to. And if you look at the dominance of that country was in manufacturing, is now moving over to technology, and then sheer number of patents they're doing. And next month, we're actually going to see government employees being paid in some form of digital currency by the Chinese government. And I think that we've already seen calls in Europe, a number of banks looking to have a digital euro. So I think for me, this is just a natural progression as the financial services finally gets rid of the quill and feather and actually starts really embracing digitization and taking out some of the costs that just seem to have crept into the business to a great extent.
Well, part of CommunityZ Chest is to get stuff off your chest, and I asked you to identify some areas of concern, and then we had to hold you to one slide. You seem to have a lot of worries on your mind. Are you getting any sleep in isolation? I do wonder. But do you want to just talk through some of these areas quickly, and then we can probably dive into a few of them as we go ahead. But overall, you seem to have a lot of concern about. I would argue scale of government debt, what to do with SMEs, and kind of regulation in the widest sense.
Yeah. Well, first of all, I just think it's just a natural course of events that we will see the decline of the US dollar. If you go back in time, prior to the US dollar that we had for each one of these around 95 years, it was pound sterling. Prior to that, it was the French franc. Prior to that, it was the Dutch guilder. Prior to that, it was the Portuguese escudo. So I think it's just a natural phenomenon that we will see the US dollar not being used as the main central currency within the next 5 to 10 years. Debt is probably the biggest concern, and I think whilst the deaths have been terrible with COVID-19, I think what it's done is it's heightened the awareness of the debt, and I call it the emperor has no clothes, because up until recently, people just wandering around and don't seem to care the fact that personal, corporate, and government debt is so large. And it's that sort of second point there about US banks that concerns me a little bit at the moment, that they've got allegedly just under 2 trillion of share capital, but you've got corporate debt at 9, consumer debt at 13, mortgages another 11. It's about a 5% default in US sort of debt could well see the bank's share capital being wiped out. So does that lead to another bank bailout? I'm not sure.
Well, how do you square this though with we've got the modern monetary theory crowd saying debt isn't an issue, and we've also got governments, basically increasing debt in the near term by 3 to 5% of GDP in a lot of cases. So this wall of debt, the big debt clock at Times Square, we've been hearing about this for 30, 40 years. It never quite seems to hit. Or am I missing something?
Well, if you're missing something, I think so are all the economists that are advising the governments that it's not a problem. But I'm sorry, you can't keep diluting the asset. And if the asset is your country, eventually, I don't know, maybe I'm just the wrong side of 50. And at some stage, you have to pay back the money that you borrow from people. And if you get this horribly wrong, we've seen what's happened in Venezuela. We've seen what's happened in Zimbabwe. Yeah. Go back further, look at the Weimar Republic. And my worry is that people will say enough is enough. Sorry, I sound like an old man worrying, but asset prices have been overinflated for far too long, in my opinion. I look at the price of property, and I take my daughter and a boyfriend who fortunately have got very good jobs. They can't afford to buy a house in London because starting price for a 1-bedroom flat is somewhere in excess of $500,000. And you can do that for Sydney, New York, Paris. It's all the same. So I think property prices are horribly overpriced. You look at how can you have a situation where 15 companies in the S&P 500 are net cash? No, so forget your Googles, forget your Apples, forget your Amazons. They're all in net debt.
Mm.
And what worries me is that we're going to see a massive increase in pre-packs, in bankruptcies and liquidations in this country and in Europe and certainly in America. And if that does happen, that's just going to undermine the credibility and the financial resources. If you look, the European Central Bank owns 10% of all of European corporate debt. So you've got the European Central Bank directly related to the indebtedness of these companies, which we know are struggling. So I think this is a real concern which hasn't been addressed, but is now going to come home to haunt us. And the figures there in China, I won't know the numbers, but you see the debt stress there of what we have in other countries. So this isn't particular to one country. This is globally with a 255 trillion debt mountain. We've got to do something about at some stage. And the people that actually benefit most out of inflation are the people that hold debt, because effectively you can the debt becomes less an issue the more the inflation grows higher and higher. So unfortunately, the governments who've got the most debt have got the most to gain from inflation, even though they're saying no, we don't want inflation. So
Yes.
that's
Yeah, I
just the way.
remember being taken to one side in the about
Steady,
1960,
steady.
about 1969 or 70. My father explained that to me when I was about 10. He said, son, I've got a big mortgage and it's just great because it's getting inflated away. And I thought, yeah, but people saw it then. You're absolutely correct. Um, and again, we're also seeing, I think, a lot of risks like Corona, where we knew that we had SARS. We knew we had the other scare. What was it, about 7, 8 years ago? We know where pandemics come from, and yet we're unprepared. And
Yep.
during the previous financial crises, we had the dot-com boom, where the asset inflation was there to anybody who, like you said, read their Hans Christian Andersen fairy tales. And we had the same thing in 2005, 6, 7, where a number of people, I happen to have been one of them, were just pointing simply not to the cause of it being CDOs or anything like that, or CMOs, but more it was just the scale of household debt. So yeah, debt. But let's move on to some other things that keep you awake at night. So the need for structured data was one as well, wasn't it?
Well, I suppose really simplistically, garbage in, garbage out. Again, whether we like it or not, the whole of our lives and economies are becoming much more digitized. But unless you can be certain of the verification and the authenticity of the information and data you're using and putting into the system, then what you do is end up having to have lots and lots of checks and balances. So if we look at financial services land and look at the number of people that are involved on a debt or equity issuance, the number of people that are involved in managing assets. You have the administrators and the fund managers and the auditors and the regulation. And that just means that the total expense ratio on funds can very often be double or triple the actual annual management fee. And we have a situation that's declining or now very apparent in the IPO market, where the cost of doing an IPO, as you can see, has gone in the 90s from 2.5% to something around 10%. And the result of that has been is you've now got a 43% decline in IPOs last year in Europe, 10% down last year across the world, and 2019 was the lowest it's been in 3 years. Because quite frankly, it's really, really expensive to do an IPO. So you really need, in my opinion, to have verified and structured data that is machine and human readable. And then that will allow you to use some of these technologies, like artificial intelligence and machine learning and blockchain, because they can then effectively use the data for different purposes. So using that efficiently, and the reason I've shown this picture of Smithsonian and Aston Martin is there's this company ScribeStar, where they claim up to 40% reduction in time and costs because their system was used for the biggest investment trust that we've seen in the UK and for an IPO. But the trouble is that turkeys don't vote for Christmas. And a lot of the lawyers and the corporate brokers and accountants that actually would benefit from being much, much more efficient, it means they can't charge as bigger fees. So they're reluctant to embrace this sort of technology. But it's structured data, I think, is going to prove to be more and more important. And the one word that keeps coming up when I write Digital Bytes every week is this word trust. And if we can have better systems and we can have more trust over whether it's government spending, whether it's the prospectus you're reading, whether it's the news that you're actually getting, getting more trust, hopefully then will mean that we can put in the systems and processes so that we can embrace this whole digital environment much, much more.
Yeah, I'm impressed that you point, and I think quite rightly, to it's not just the decline in IPOs, but it's then also the scale of listed companies. And I was, for example, this changes a lot of behaviors where I was in discussion with a group of people on the environmental front. And of course, the entire ESG area, environmental social governance, ratings, and blah, blah, are there to influence a public share price. The minute somebody says, listen, it's just not that attractive to be on the public markets, I'm going to go private, a lot of that moral suasion, or, well, a bit more than moral, of share price suasion just falls away. And I myself, couldn't agree with you more that when we started AIM, which was back in the late 80s, it was there to get out of the regulation. And now you couldn't put much of a touch paper between AIM
No.
regulated and main board, but some of the regulation is insane. And in fact, I've stopped. I used to do an IPO once every 4 or 5 years, and the last 4 or 5 years we've just not seen it as a valuable way to engage with anyone. So I think this is a big point and a very important one. Now, you also wanted to have a little bit of a look at everybody wants to get that plague shot in, and no matter how many times I see it, I really like it anyway. But you had
It
here
actually might
ideas to keep an eye on.
Okay, so what on earth is all this about? Well, really, really interesting. The older you get, the more you look at history and you look at, say, well, actually, potentially the Spanish invented inflation in the 15th century, 16th century, because they had so much gold they'd whipped out of Latin America and just went on a frenzied buying spree all over Europe. We then have a man with a carrot nose, courtesy of the Wellcome Foundation, whereby, it was the plague doctor. And if you look at what the Medicis did, they actually shut Florence, and they had guards posted on the roads all around Florence in 1630. And because the plague was coming down from Villefranche, in sort of south of France.
Yeah.
And they said, unless you have got your health card, because believe it or not, the French government actually insists all the departments actually issued a health card. So it would describe what you looked at and were you clean or not. So it's kind of a bit like a vaccination cards that we used to have. Have you had your vaccines before you get on aeroplanes and the such like? So this all goes back over 300 years ago we had this. And because the Medicis were so strict on this, and they actually then said, okay, so if you're in the city, we're then going to impose something called quarantine on you, which, as you know, comes in your recent publication, you wrote about the Latin word, and it's actually then the Italian word for 40 days and 40 nights. And they gave you a sausage, and, well, I hope it was a sausage. They said sausage, and they gave you a pint of wine, and the city officials didn't give money. They gave you what you needed, and they kept you in your house. And as a result of that, the death rate in Florence was 12%, as opposed to Verona, which was 60%.
Yeah.
So we're seeing not a dissimilar thing, but on a more light-hearted matter. We've got good old Long John Silver down on your bottom left. And
I thought that was you photoshopped in.
No, it's basically, this came from talking to Jerome Souter, who's a senior partner at CMS in Paris, and he's currently lobbying the French Financial Services Authority to say we need to draw on the precedent, which is nearly 500 years, and that is the kings and queens of France, Spain, Holland, UK. They actually had a whip round in the courts, and so there's a bag of gold, Long John Silver or Nelson, who was arguably Britain's best pirate, because he ramaged all the way down the east coast of Spain and became so good at it, he then wandered off and did the Battle of Trafalgar for us, but that's a different story. But what the pirates were doing was saying, okay, well, what we'll do, the French will go and get a couple of ships, and we'll go and beat up the Brits, bring the ships back, and then we'll share the booty. And it wasn't a debt instrument. It was before we saw sort of the joint stock companies coming out of Amsterdam, so there are no securities. And it flies right in the face of the Howey test, because you were profiteering from the work and endeavours of others. And so therefore it was perversely a gentleman's handshake. And basically saying, there you go, Michael, I'll give you a bag of gold. Can you go and beat up the frogs or the Dutch or the Spaniards? And then we'll share in whatever you get when you come back. And what they're saying, and interesting, within a couple of days having this conversation with Jeremy at CMS offices, I then spoke to a Dutch guy, a Dutch lawyer, saying exactly the same. They're lobbying the Dutch government to say, look, what we need I look at it as crowdfunding plus. So it's a way of actually trying to raise money and create an instrument which can then be traded on a market. So there is an exit route potentially for those that want to come out. And it's not a full-blown security with, minimum 150, if you're lucky, more like £500,000 worth of cost to do it. So go back to your point about AIM. So it would encourage you to start looking to float a business on AIM again. But it's not the chaos that we saw with cryptocurrencies, where it's just lies and vagabonds and nefarious actors. So that's something we see really quite interesting. The other idea I've got there, just go back to, because I think it's
sorry there, Jonny. Go ahead.
Is this revenue sharing idea. The problem with investing in small, medium-sized companies is that, basically you sit down with the accountant at the end of the year and he says, how much tax do you want to pay? You say, well, not a lot. Okay, well, we'll employ the missus and you'll go and buy a bit more equipment, or we'll put money in your pension, et cetera, et cetera. So actually, but that doesn't really align your interest as an entrepreneur with the investor, because the investor wants a dividend. Whereas if we actually had some sort of instrument whereby the more revenue you create, the quicker you pay off your investor, but once your investor's got his money back, he then gets a much, much smaller income, but he gets an income for potentially forever. But no dilution, no debt for the company. So looking at revenue sharing ways that you can actually do that in a very tax efficient way, I think is interesting. And I put in HSBC against the bonds there is because according to HSBC, issuing bonds on a blockchain could be as much as 90% cheaper than using traditional methods. So it's certainly got to be worth looking at, which is why the World Bank have been doing it in any case.
Well, we're getting a teensy bit of feedback here. So those of you on the line, please feel free. Got a lovely comment here from Martin Watkins. Long John Silver in Medici reminds me of how the Ile-de-France in Paris was under siege to the Vikings, or the Bordics as he calls them, the Nordics, and paid them in silver to sail up the Seine to attack the next major settlement. Yeah, but interestingly as well, of course, historically the example of Alexander the Great, who arguably his great invention was to pay his men in silver, knowing he could always find silver. We had a good question here from Chris Wickham on, do you envisage this revenue sharing in tokenized form? I think you do, don't you?
Yeah, and it's one of my asks that we actually look at embracing new types of securities, because it goes to my real concern, certainly from a UK and a European perspective, and that is the dominance of small, medium-sized companies in terms of their turnover and in terms of the number of people they employ. And if I'm only partially correct, and we see banks seizing up even more and not lending money, they're not. Banks are a bit like giving umbrellas when it's nice and sunny. They should be giving them when it's raining. They're not great at actually investing in small, medium-sized companies and the lending there. We've seen this for years. So we need to find a way to help the banks, because the banks want a prosperous economy, and they're good at certain things. But we need to find a way that we can generate capital for small, medium-sized companies, and maybe some form of revenue sharing token is a way, sorry, I'd rather use the word security, a way we can do that.
Yeah.
But overall, I would say I'm more optimistic this time as we enter a recession than I have been at any stage of my life.
Well, I'm conscious of time here, so let's whip through some of these reasons for optimism and move on to your big idea.
Okay. Well, first of all, I was horrified that 97% of antibiotics going to the US and Europe actually emanate from China. 80% of active pharmaceutical ingredients come from China. So even your paracetamol and your ibuprofen come from one country. So once we are aware of the provenance, and we can get provenance much, much greater with the technology, 3D printing, I think you're going to see a return. I was involved in a business a couple of years ago, and we were already seeing signs of manufacturing coming back into places like America and Europe. And I think that's really going to be a great thing. Peer-to-peer energy. So if the cost of putting up a solar panel or a small wind farm on my land or house, whatever, and then I can get my money back within 3 or 4 years because I can sell it directly to my neighbor, well, I think that's got to be a good thing. And have a look at a website called Grid Watch, and it shows you the percentage of electricity being produced by different sources. Nothing from coal, about 20% coming currently from gas. And last week when the sun was shining, we were up to nearly 60%. So that's really good. I'm really attracted by looking at alternative investments. So being able to monetize data and being able to monetize intellectual property, which ought to be not correlated with other parts of the economy, which I think is interesting. And then nudge economics. This isn't new, but it's the picture down the bottom, unfortunately, shows the horrendous situation in Asia of plastic waste. And you've got the charity Plastic Bank teamed up with S.C. Johnson, who make Windoline glaze and boot polish and that sort of stuff. And they've now recycled 30,000 tons of plastic by
Wow.
not giving people cash, but giving them a token on their mobile phone. And that token can then be changed for food, books, education.
Okay. Well, we're
So
going
in
to have
terms
another. Oh, sorry. Go ahead, Johnny.
it's I'm not going to go through all of those, but it's just some thoughts and some ideas. We need to have a different way to raise money to help these small to medium sized businesses. The current scheme is full of good ideas that the government's come out with, but we have a crazy situation whereby people are being encouraged to sit at home and not work. There are a number of businesses that could work. I know a number of companies, and the staff said, we want to be furloughed and get 80% for the next 6 weeks. Why wouldn't we? And it irritates me when I hear, Primark, 900 million. That's what they made last year. And now they've just furloughed all their staff. It's going to cost us 81 million a month, potentially. Well, why didn't they invest into online retailing? We've got the same situation for McDonald's. We've got the same situation. These companies can afford it. The taxpayer shouldn't be doing this. It does incense me that we're seeing this. Oh, and by the way, Tesco's £600 million dividend, and yet the supermarkets are picking up a 2 billion tax credit. So actually start getting governments to be a little better coordinated and not write to me 3 times to say, you've got some nasty disease, Johnny, don't go out of the house for 12 weeks. No, it's just start having the systems and processes that are a little bit better coordinated would be very, very welcome.
So your big suggestion is very much this idea of a very easy way for people to raise money for SMEs effectively or startups. Is that right?
Not so much startups.
Okay.
I'd like to see a little bit more emphasis on the medium as opposed to small to medium. So these are businesses that are perhaps a proven business. You may want to say they've got to be going for a period of time. I don't know, 18 months, 2 years. I would want to see proper governance in there. I'd like to see at least one, if not two, non-executive directors in there. So and a lot of the good things out of the regulations, I think we should embrace, but it shouldn't turn, the regulation shouldn't be the business prevention department. We should look at the regulations. They're there for real practical reasons, and we should learn from that, but we should use technology. So, one of the things about this whole thing about delegating authority, you should, without a doubt, do KYC and AML. But come on, the banks have been the biggest scallywags out. 320 billion in fines in the last 10 years. But what we don't want to do is we want to have KYC and ML, but if someone's got a good system and process and we say, we like those standards, we're going to use it, well, then it shouldn't have to mean you've got to recheck every single time it goes through the system. There should be some sort of accreditation, a bit like your healthcare identity. Once you've improved, you've got that, then you can use that, whether it's your gas bill or buying a share or, changing a lawyer or something like that.
Well, let's got a couple of questions up here. Basically, this is a proposal, though, so no money's been raised from revenue share tokens so far. Or am I wrong?
There's currently a company called Parking Go, which is operating 80 car parks. They're in the process of trying to raise 15 million on that sort of basis. And there's a couple of others I can't disclose, but that one is in the public domain.
It's an interesting idea because it's sort of somewhere between equity and debt, isn't it? You get a call on the direct revenues, but you're not really an owner. And on the other hand, you're effectively being repaid what is a loan. Yeah.
And you get your money back faster, hopefully, which is, then you can recycle your money back into another venture.
Yeah. Well, Chris Wickham has just popped up and says, but it disrupts the dividend model. But does it? It's another stream. The owners know where it is. Martin Watkins is curious, possibly because he's coming from a big exchange point of view, but how will we determine who owns the data that's being monetized? This has currently been taken by the exchange groups as their data. Any thoughts on that?
Well, when I talk about data, I'm talking about data in a sort of format. So according to Aon, 90% of all the information on a new building is either inaccurate or incomplete when it gets passed over to the first owner. So therefore, if you have two buildings and one has got data and it's all secure, and the other one just has the normal mishmash of inner filing cabinet, a PDF, an Excel spreadsheet, emails, then I'd argue that it's a cheaper insurance Well, sorry, I'm not arguing. That's what I've been told. It would be cheaper to insure one building where you know the risks and the data, and the other one you don't. And then maybe the people that own that data, the building, perhaps they would charge people for different access. So maybe HR needs it for one reason, the health and safety needs it for another reason, insurance people for another reason, finance for another reason. So you can start monetizing the data rather than the data being monetized and you get no economic gain, which is how we've seen the likes of Google and Facebook turn into multi-billion-pound operations because they've taken your data without permission.
Very true. Yeah, so we've been running a lot on that, on permission markets for data exchange and how to really do it. Although there's an interesting article in The Economist this week that I think was in the Charlemagne section, where they have their editorial on Europe, pointing out that COVID was to some degree rampaging through a lot of the GDPR provisions. That people were sort of, well, that's nice when you can afford to do it, but health is now the issue. So give me all your personal data.
Yeah.
Okay, Jonny, well, we're going to have to wrap up in a few minutes. So just quickly here, you've always been pushing for better financial education. So why don't you talk to your requests to the audience?
Well, I just think we need this. This needs to be in schools. People need to understand the power of compound interest rates and the power of compound debt, which is why you don't want to owe a load of money. Focusing on being a farmer, not a hunter. So look after your clients and stop looking for new clients. It's a much, much more efficient way of running a business. Actually getting people to understand what a Sharpe ratio is. So you've made a return of 10, but how big was the zig and the zag, the up and the down? Because if you had huge swings in a price, but you've only had a small return, well, most people wouldn't be happy with that. But huge swings in a price, but you've had massive return, and you can, and I never thought I would use it in life, but the old bell-shaped curves, standard deviations, which not enough time to go into now, but I know you well know very, very well. But trying to say to people, look, you can actually measure the
Welcome
risk.
to statistics, Jonny.
Well, I'm not going to take you on there because I know you've got your expertise in without a doubt. But some of these don't need to be complicated subjects.
Some very good advice.
Bring that into the vernacular and get people to understand it, I think is really, really important. And this whole thing, don't be put off by the tech. We don't know how to service our cars, a jet engine, or let alone our mobile phones, but let's focus on what you can do with it for your business and embrace it accordingly rather than putting up barriers as to why you shouldn't actually be doing it.
Well, we've got a couple of slides here. Really, first is that Jonny's got his monthly meetups. So the next one's on the 2nd of June. I must say, I am a subscriber to the weekly Digital Bites, folks, and I find it very helpful and useful. And you don't need to hear it from Jonny; you can hear it from me. I'd encourage you to do that. Jonny does provide also a daily video. It's very short, punchy stuff. Jonny, did you want to say a word or two? You seem to be getting quite a bit of take up on those, aren't you?
Yeah, we were talking about this earlier on. I know you're not as keen as I am on these sort of snapshots, but I was challenged when I realised that in 30 days there's more content goes on the web in video format than the whole of the last 30 years of all of the US broadcasters put together. And I didn't think people really cared about a video, if I'm honest with you. But I would really, really encourage, if you've got a business, it's a bit like the elevator pitch. Try and get your message across in under 2 minutes about something that you're interested in. And we write articles and we then do a video. And the article is maybe 500 to 1,000 words. The video is 2 minutes, and we get something like 20 to 30 times the engagement on a video than we do on an article. And so I would strongly recommend, as a take out, if nothing else, nothing to do with either of us, just try doing it. You can do it on your mobile phones, and it's a good way to keep in contact with your clients because people seem to be engaging in this sort of thing more and more and more.
And Jonny, just before we break, I've got one question here from Bob McDowell, which frankly I'm interested in the answer, so I'm going to try and squeeze it in. But it's related to some of your points earlier. When will the Chinese renminbi become a major reserve currency? And will COVID crisis hasten that?
Never.
And why is that?
They don't want it. What I think we're going to get a version of Libra, but what it'll be a combination of equities, bonds, currencies, commodities, and property. We'll hopefully get away from the manipulation of one particular powerful, unfortunately, individual that we have at the moment, but certainly country, that we've had in the past, and we'll actually have much more stability, much less volatility, because it'll be very difficult to manipulate. So I actually foresee the next reserve currency being a basket, not dissimilar to Libra, but it won't be a basket of just currencies. It'll be a basket of real tangible things that we use on a day-to-day basis, because I foresee all of those types of assets being available in a digital format, therefore tradable 24 hours a day, not just traded for a few hours a day. And therefore it'll be traded globally, and there'll be no one taking a slice as a middleman in between. That's what I think we're going to see, but it can take a while to come. But I think next month's movement with the People's Bank of China for their digital currency is a step towards that direction. Now, one caveat, I could be wrong, because at the moment, if you look at the official gold figures for China, they've got very little gold. But unofficially, it would appear that China could have as many as 30,000 tons of gold. Now, have they got all that gold? And are they then going to try and go back in time, lessons from history again, and see some sort of Chinese currency backed to an extent by gold reserves? I don't think so, but there is a possibility. And I think you could therefore see a huge flow of money into something like that, because at the moment, just printing money for money's sake, at some time, the eggs come home, or the birds come home to roost, don't they?
Well, I believe those Chinese gold numbers are actually rather correct, not least because they're not recent. Certainly for almost the last 20 years, China's been taking roughly 25% of global gold production, and it produces about 25% itself. So
But it's not
it's
allowed to
almost certainly
sell.
there.
You're not allowed
Yeah.
to sell Chinese gold. If you produce Chinese gold, you can't sell it. So
Yeah.
it's staying in the country.
So, folks, a good canter amongst one of our one of our core community members, and always good fun, Johnny. I love your perspectives. Again, folks, I will recommend Digital Bytes a weekly. It's free. I enjoy it, so please do sign up for it. We've got a number of other webinars coming up, not least on Wednesday. A particularly interesting one. We're going to be looking at Gift City. That's the financial center in Gujarat, coming online there. That one is horrifically popular. So there are only a few spots left, so do register quickly if you want to catch that on Wednesday. As ever, everything's on the website, and in Johnny's case, in a short, less than 2-minute video. Johnny, it's been a real delight to have you, and I thank you so much for
Thank you, Mark.
sharing many of the things you've done today, and look forward to staying in touch with you. Take care, everybody, and have a good day.